Hi, Carl. Thanks for taking time out to speak with us here at Securities Finance Times. Great to see you and great to catch up. And going straight in with the first question, how is RBC Investor Services investing in its technology for the securities finance market?
Well, thanks for having me here, Justin, and always great to see you. We have embarked on a technology modernization path within our securities finance product. As you know, we recently sold our European business to Kolasingh, and what that has meant has been a refocus in strategy. We're focusing on Canada, our home domestic market, and with that, we've seen additional funds and funding and benefit from that directly within the securities finance program. What that means for us is that we are looking at future-proofing our technology. We're looking at it end-to-end, and this will have benefits on both sides of the trade. Our beneficial owners will see benefits of getting to market a lot faster, automation, and so will our counterparts. They will see high degrees of automation on their end as well, and in a compressed settlement cycle like we are in today, that's even more important.
Fantastic. How did the recent transition to T+1 go from a company perspective, from the securities lending division, and what sort of services and initiatives did you sort of learn and benefit from?
So we're just about 2 weeks in, and I think that it's safe to say that it's been good thus far, but we're not necessarily out of the beginning stages of it just yet. With RBC Investor Services over the last 12 months, we have spent a considerable amount of time speaking with our beneficial owners about T+1, what that means from a securities lending perspective, but also in the wider context, because it has a lot of reach for our clients, our institutional clients. We've spent a lot of time synthesizing the industry best practices from the various associations and interpreting that for our beneficial owners. And we've also spent considerable effort automating our trade flows and specifically recalls. That is a necessary aspect of the trade cycle, especially in this compressed settlement cycle.
At the recent CASLA conference, you spoke about the need for neurodivergency and greater awareness for work in that area and DEI and the work that's being done in the industry. Can you further elaborate on that?
So I'm a strong advocate for DE&I within our industry, and I have to commend Women in Securities Finance that gave me that license, seeing them representing all aspects of diversity, equity, and inclusion over the last couple of years. And it's something that's very important to myself. So with neurodiversity, what I was speaking about was that if we are to foster, if we are to build a talent pipeline and make that sustainable, with the goal of having a successful industry in the future, we have to acknowledge, we have to accept, and we have to be practitioners of diversity, equity, and inclusion in all facets. And I think that neurodiversity, whether you are neurotypical or neurodivergent, is an important key factor today in terms of building that awareness, but also specifically within hiring practices. I'm also the chair of the ISLA DE&I working group, and one of the things that we constantly are discussing is how to implement that. Without those initiatives, without incorporating the awareness for gender diversity, inclusivity, and neurodiversity, you cannot build a resource pipeline for the community for securities finance.
That's fantastic. Some excellent points you've just raised there, and thank you very much for taking time to speak with us here at Securities Finance Times.
Thank you.